Happy Monday, traders, and welcome to a fresh week in markets. Okay, so in Friday's session in the US, we had some very important economic data out, and that was the US non-farm payrolls, so the July employment report. Market was expecting the headline number to come out around about plus 80,000 new jobs added, and the unemployment rate to remain steady at 4.2%. But the number came out well below expectations. It actually came out negative, around about negative 20,000, so almost 100,000 lower than what market expected. We also had revisions for the prior 2 months, and they were revised down 100,000. But we did see the unemployment rate drop from 4.2 to 4.1. But the reason that happened is because the participation rate dropped, which basically means that a lot of people have actually stopped looking for work and left the labour force. So look, the bottom line is the market looked at the data on Friday and gave it a big negative. So look, what does it mean? So if we have a look at what it means for the Fed, so if we look at Fed fund futures, now post the last Fed meeting, those Fed fund futures were pricing in over a 70% probability that the Fed would raise rates in September. That's when it meet next. And now, post that data, that big miss on employment, that's actually dropped now down to below 50% to around about 44%. So now the probability of the Fed being on hold is actually larger. It's around 56% than the probabilities of the Fed actually raising. So the market is slowly pricing out that the Fed potentially will hike in September. So look, that's probably the big key takeaway. How did other markets basically take it? Well, we saw probably precious metals was the bigger move. So both gold and silver had absolutely amazing weeks. On Friday, yes, they did add another 2.5% or so. Gold was up a whopping 7% plus for the week. Silver up a whopping 10% for the week. So yes, post the data, they continue to rally and continue to do exceptionally well. Look, gold does definitely have some resistance around 4,400, and I'd suggest it might take a bit of work to get through there, but no doubt market now is firmly looking to buy dips on both gold and silver. So they've been standout trades in the last week. US equities, they did have a positive session on the back of the fact that maybe the Fed might not have to raise rates. Equity markets love that. So yes, S&P and NASDAQ were positive, up 0.5%. And S&P is still up very elevated levels, close to record highs. But we didn't see those equity markets or S&P make new record highs on Friday. Currency market, yes, of course, we saw US dollar selling, led by dollar yen. So dollar yen was trading around 158.50. It dropped two big figures before it retraced 100 points and closed around that 157.50 area. And this morning it's already sort of climbing back towards 158. So no matter what sort of good news dollar yen gets for intervention, the buyers are certainly always there waiting and pushing it back up. But we haven't seen, I think dollar yen is really going to need to see broad-based US dollar selling before it gets some momentum lower. But again, on back of that data, we didn't really see huge selling of USD. Anyway, moving on to the Middle East. Over the weekend, as usual, we've got lots of headlines. The biggest negative headline is that we saw the Houthis in Yemen actually successfully bomb some Saudi oil infrastructure. Yes, the fires were put out quickly, but it's just a reminder of how the war has actually turned into more of a regional war now as well. As far as Iran's concerned, they have become even more stubborn with respect to the closure of the Strait of Hormuz, and reopening the Strait of Hormuz will only happen when all their demands are met. They're adding more demands now that they want war reparations of around about $300 billion. They want sanctions lifted, but they want the US blockade lifted, and they want US to leave the region as well. So look, really big demands. Hard to see how the US is going to agree to any of these things. On the US side, Trump hasn't escalated, and he seems to be just working with the blockade at the moment and thinking that maybe the economic damage that is doing may get the Iranians to the table. But Israel does see that the US is sort of backing away from the war and escalation on an off-ramp, and have said that they are willing to go alone against Iran. And Iran is preparing potentially for a surprise attack from Israel. So look, there you go. None of them really positive headlines from the Middle East. And yes, we have seen oil open, and it's gapped open and started trading about 2.5% higher than Friday's close. And the price is now going back up towards $80. So at the moment, it looks as if, say, the wider range on crude is probably $75 to $85. It's probably going to bounce around in that range. For it to go below 75, I think we're going to really need some good headlines. Not sure if we're going to get those. And to break 85, I think we really need some escalation happening. But crude has been very volatile. I think it will bounce around in that sort of $10 range probably this week, with a bias at the moment, definitely buying dips. And if we see that sort of gap fill from this morning's open, it's probably some good levels to get into. As far as this week is concerned, we do have some economic data coming out and some event risk. Locally here, we've got an RBA meeting tomorrow. The RBA has raised rates 3 times this year. The cash rate now is at 4.35%. The last meeting, they were on hold, and the expectations is that they will be on hold tomorrow. CBA's come out saying that they believe that the RBA is going to be on hold for the rest of the year. So look, potentially this RBA meeting is probably not going to be much of a market mover. But what can be a market mover certainly is on Wednesday, we get US CPI July numbers, monthly numbers. The headline number there is supposed to go from 3.6 to 3.5%. So not much of a change. Obviously, market's going to move if the number comes out above expectations, obviously in a negative way. So let's see how that comes out. It's worth noting that over the course of July, crude was trading at its lows and only traded higher. On Thursday, we also get US PPI, so some more inflation metrics. And then finally on Friday, you've got some US retail sales. So some economic data out this week. Potentially the US CPI can be a market mover. But other than that, this morning, market's opening. The biggest move has been obviously crude oil. So all eyes are on that. And obviously, the higher crude spikes, it does impact, obviously, pretty much the broader market as well. So keep your eyes on crude to start the week, and obviously any headlines from the Middle East. And good luck with your trades, and we'll check back in with you shortly.